Hi guys, this is a video just for those of you who are interested in trading the stock markets. It's not something I would advise people to undertake lightly, but onmybubble.com has a sister website that we're going to set up, which will essentially look at some of the trading systems I've developed over the years, and hopefully the information will be useful to people who are interested in trading at a fairly serious level. My trading outside of my professional banking and consulting was done in between traveling times on trains mostly, but got quite serious at a certain level. I was trading upwards of £250,000 per day per trade, just to give you an idea, and went into the multiple millions in any given year, and I'm talking £6, £7, £8 million annual trading. So some of the systems I used to be able to make trades, i.e. to wake up at 8:30 in the morning, trade £200,000, jump on a train, sit at my desk, and know that I'd earned more money in a single morning traveling to work than I was about to earn as a consultant working for Accenture for the rest of the entire day. If you're interested in looking at the systems I use, and they are very, very advanced systems, so make no mistake, there's a lot of data, a lot of number crunching, and this won't be for everybody. So if you are squeamish about looking at spreadsheets, numbers, and stock prices, I would switch off now, but you might be interested. I haven't built the website yet. I'm going to build the website. So those of you who are interested in the type of sites that I build, have a look at onmybubble.com. Come along to the just to make sure you know how to use this. If you are not a member of onmybubble.com, you will need to sign up. You will need to sign up using this registration form here. Once you've filled this in and activated the email that the system sends you, you'll be able to log in using your password and username. The system has some various business interests along the side here. These are mostly user interests on the left-hand panel, but on the right-hand panel you've got a whole range of links which will look at things such as online stores or online shopping, and affiliate links such as links to gaming websites and various other affiliate type money-making blogs that some people are interested in. But I've also got a section for trading, and this is one of my areas of expertise as a professional accountant, consultant and banker. I've worked with the stock market, I've worked with banking, capital markets, so it's something I do know a little bit about. It's not something I have done as an amateur, it's something I have done as a professional. But this is the link, takes you to trademybubble.com, and I just wanted to really introduce this site initially just to give you an idea of what I'm going to put onto it. I'm not 100% sure yet what will go on here, but I'll probably load a video later today to show you some of the stuff that or some of the techniques that I've used for analyzing and picking stocks. But just briefly, this covers the full spectrum of information you really need to have at your fingertips, and you'll either know this stuff or you won't. But if you don't, this is a useful framework, or it will be once I've gone through and actually tidied it up. So apologies for anybody who thinks this is a finished product. It isn't. So this section will have the about and will explain. But let me just come into the Trader Toolbox. Member registration, funding your account. If you have a stockbroker account, you need to fund that account. There are lots of strategies for doing that. I won't go into them here. Trading Academy, that's just going to be information on trader education. Social network, we've had a little look at the social network and how that can help. Risk management, managing risk is highly important. Most trading is very boring. It's very easy to press a button, press buy, press sell. Nobody would deny that that's very easy. But if you do that for a whole year, and let's say you were only trading 3 to 5 trades per week, for example, if you're a swing trader as opposed to a day trader, don't day trade, full stop. My advice to anybody who's considering that is not to do it. It's just a bad idea for a million reasons I won't go into here. And you've got long-term investing. So investing is very different than trading, and I'll talk you slightly through that. Fundamental analysis, technical analysis, portfolio building, swing trading, position trading, risk management, using leverage, trading with leverage, benchmarking, performance, financial management. They are key elements for any trader. If you do not understand any of those single terms, you are not equipped to go into a live trading environment. Do not do it. You will lose your money. Now, even if you are equipped with all of those things, when you do go into a live trading environment, you will lose money. Most traders will lose between 6 to 8 trades in every 10, or 60 to 80% of their trades will be losing. The Pareto principle, the 80-20 rule, 20% of your trades will give you 80% of your profit, 80% of your trades will give you 20% of your profit. Think about that for a minute. That's a standard rule in life, but the Pareto principle applies. So the sort of activity I'm involved in would start out with fundamental analysis, understanding the broader macro situation, the global economic situation, understanding the sectors that you're interested in and how sectors perhaps rotate or rise and fall, and then being able to understand the types of companies within a sector, and then the individual performance of a particular company. For example, if you're looking at Tesco and you're saying, well, should I invest in Tesco? Well, I look at the CEO, it's Dave Lewis. Is Dave Lewis a competent individual? They fired the board of Tesco. Tesco's share price was cut in half. Dave Lewis was brought in to turn around the business. Now, at the time when a lot of people were saying Tesco has now turned its business around, it's shelved a lot of its costs away, or it's cut a lot of its costs, now is perhaps a good time to go in. I have actually looked at Tesco and found out that it was still overvalued. I went back then a year later to double check to see if my analysis was correct, and what I found was, in fact, the share price had dropped another 50%. So, and the reason for that, I had previously explained the year before in my analysis. I'd done a financial analysis of Tesco. I valued the intrinsic value of the stock and realized that its current share price was still well in excess of its intrinsic value based on my analysis. And that analysis included financial analysis, operating model analysis, macroeconomic analysis, and some other types of intuitive or insight analysis. An intuitive insight analysis is something we can all bring to the table, irrespective of any technical skills. That's important. Once you've gone through and done your fundamental analysis, and this will be a research section which hopefully will have some decent research information, but once you've done your fundamental analysis, you want to then decide, let's say you've done fundamental analysis of 6 or 7 or 8 companies. You want to then bring them into a portfolio, and there are ways to do that. Once you've decided that companies are companies you are willing to invest in, you then have to say, well, what will be important on a short-term basis, i.e. from a timing perspective, because there's never a good or a bad time to enter or exit a stock in the long term, because in the long term, it's fundamentally the value that the business adds will impact the stock price. But in the short term, you can use timing factors. You can use overbought, oversold, or technical factors to do with the trade at the short, medium, long, and sector trading cycles. and there are various things that impact the cycle. So you want to be coming up, or you will need to have an effective system for constructing a portfolio. Just going in and willy-nilly buying a stock or adding a stock based on somebody's tip is always a bad idea. Professional people do research and construct models that send out signals whether they should be entering or exiting individual positions, and so we call this position trading or building positions, and then we work within those positions to adjust the position. So a long-term or a professional fund manager will maybe invest in 6 to 8 stocks and maybe skip in and out of those stocks or reshuffle the portfolio depending on various different signals. So for example, where most traders may sell a stock when the price drops, professional fund manager might just use that as a signal to enter and buy more of the stock. So it will depend on their time horizon, and so we will take a little look at that. So this is the system for trademybubble.com, and I will be adding a video to this later. So I'll add this little short snippet we've just produced to the playlist. If you go on to trademybubble.com, and if you want to contact me, there is a form here which you can use to do that. Equally, if you go on to onmybubble.com, you can you can join the social network here. You can actually sign up to the video, on my Bubble website itself, using the sign up form here, which I showed you earlier on. Or you can come straight to the contact page. You can contact me on the contact page. This is a rather pretty stylized form here. You can use that to get in contact as well. The next video will actually show you in detail a trading model, and the trading model is an advanced database essentially that accumulates a whole range of performance indicators, from stock prices to fundamental analysis and technical analysis, and then it builds in signals that enable you, essentially does the housekeeping for building your portfolio. So think of it a little bit like a vacuum cleaner. A vacuum cleaner can hoover up all of the dust into one place. You then empty the bag. Well, a trading system will hoover up thousands and thousands and thousands of data points to do with things like share prices, and it will put all of that into a database, and it will, based on the algorithms you design, it will then bring that together into a modeling system that will let you very efficiently pick stocks or move in and out of stocks. You don't want to be doing this willy-nilly. You really need to be doing this with a very well constructed trading system. They can be big and slow and cumbersome, but as long as you have a system, you have a start point. You can tweak a system and you can make adjustments to a system, but if you have no system, you really are shooting yourself in the foot, and it isn't something you want to do. So I will hopefully speak to some of you guys